Can you still hear me, Peter?
Yeah, we can hear you.
Okay, perfect. All right. So last week on oil, when the markets opened up, we opened up at 120. So this was last Sunday, and you can see right here, last Sunday market opened. That's literally this candle. We literally opened up at 120. So when the markets opened up at 120, and I was listening to all these interviews, and they were talking about, yeah, they're looking to open the Strait of Hormuz, which is where all the tankers carry oils to all the different countries. Majority of oils that other countries get, they get it through the Strait of Hormuz. So the reason that oil spiked up to 120 last week was because the Strait of Hormuz was closed. So that created such a heavy demand for oil because a lot of countries aren't able to get their oil. They had to tap into their strategic reserves. So when I saw that oil opened up at 120 last week, and based off of the commentary that I was hearing that they were looking to open the Strait of Hormuz last week, I actually got into sales on oil and I exited around I got in around 114, which is this level, and I exited at around 92. And this took me maybe about 30 minutes. So as soon as markets open, I saw that it was already overbought. And because I heard that they were looking to open the Strait of Hormuz, I jumped in on sales and I was able to make a nice profit and I got out. And now what's happening is they're still keeping the Strait of Hormuz closed in a sense, which means Iran is not allowing anybody to go through that passageway. They're laying down mines. They're doing anything they can. They already blew up a couple of Thai ships that were carrying oil. It was a very big deal. So Trump right now is calling on nations that carry their oil through the Strait of Hormuz to kind of lend a helping hand to keep the Strait of Hormuz open. But as we know it right now, it's not all the way open. That's why we still see this demand for oil at around $100 a barrel.
Mm.
So if they continue to keep the Strait of Hormuz closed, I do see oil continuing to go up. Now, unless something major happens, I don't think we're going to see 120 again. I think that price was severely overbought. So I don't think we're going to see a price going all the way up to 120 again. I could be wrong, but something major has to happen because this 120 was a result of the Strait of Hormuz being closed and the oil refinery in Iran got hit at the same time. So that's why when the markets opened, we saw this very big spike all the way up to 120. But based on the commentary, even Trump even posted a tweet last week saying, oil prices are going to come back down. So when you factor in the different sentiment, anyone who is long on oil are probably going to start taking profits. And traders like me who's paying attention to that sentiment might even look to start selling oil. Now, right now, I don't want to jump into a sell on oil right now, just because I don't know what's going to happen this week with the Strait of Hormuz. Um, so I'm going to stay out of this asset. But this goes to show you that, when we're getting into a brand new week, we have to think from a common sense standpoint, from a logical standpoint, and ask ourselves what is actually going on in the economy right now? What is going on in the whole world right now?
Mm-hmm.
Because usually when I trade, I like to trade macroeconomics. I don't like to just come on the charts and then just, look at what I think the markets are going to do. I like to make my trading decisions on based on where I see the economy going and based on any type of factors that could influence these different assets. Because when you apply geopolitics and economics, you can pretty much trade any asset class out there, whether it's oil, it's gold, it's the equities like Nasdaq 100, Dow Jones, S&P 500, and you can even trade currency pairs because every single asset class is being driven by supply and demand, and that boils down to economics and geopolitics. Hey, I can't hear you, Peter. I don't know if you're muted or
Oh,
if it's
okay,
just
my bad.
me.
Where do you look to gather that information? Like you just looking at the news? Are you like going to a certain place to get that info to do your analysis when it comes to the economics? of
Okay,
whatever.
so right now, because we are in a geopolitical situation, usually when I'm trading, I look for economics, and my first go-to place for economics is tradingeconomics.com. So I don't know if anyone has ever been on here before.
Never heard of that in my life.
All right, well, shit, I just put you on. Okay,
Yeah,
so
absolutely. I've never heard. You heard of that, Millie?
Nope.
all right,
I've
cool.
never
So
been
check this
there.
out, right?
Mm-hmm.
So trading economics, you can go on here, and all right, perfect. What's up, Newton? You can actually go on trading economics, and you go right here to where it says countries. And let's say I click on United States, I'm able to all the economic data for the United States. So one of the main things I always look for is inflation. So if I look at inflation right here, I'm able to see our inflation values in February 2023. So if I go to a five year, right? Our inflation was the highest in June 2022. It was 9.1%. And this inflation at this time was caused because we had COVID-19 that just happened. And when the economy started opening back up again, we had what was called a supply chain crisis, meaning we did not have a lot of supply of goods and services. So because there was less supply and the economy opened back up, there was a lot of demand for our goods and services that the price of everything skyrocketed. So when the inflation happened, the central bank has to step in and they will raise or lower what's called interest rates. So you can see from here, March of 2022 onwards, the central bank, the Federal Reserve of the United States, started to raise their interest rates. We went from having a less than a 1% interest rate all the way to a 5.5% interest rate in the span of almost from February 2022 all the way up to July 2023 in 1 year. So when interest rates go up, what happens is the dollar or the currency of that economy also will go up. So if we go and we look at the US dollar from, if you look at the US dollar all the way from June 2021 all the way to September, October 2022, you can see the dollar gained all that strength. Because what happens is when they raise interest rates, there is less supply of currency in the economy because people are not going to be looking to borrow more money. So they're going to be looking to save more money. So when there's less supply of currency in that economy and there's more demand for that currency, the most common sense is the value is going to go up.
Thank you for that breakdown. That's great. I never knew about. Of course, I know the economy affects whatever currency you're trading, but I never knew about that website. What can you throw that link in the chat?
Yeah, it's tradingeconomics.com. Let me see if I can put it in the chat.
Because it gave you a whole breakdown, and so basically you use that as an indicator.
Yes, and these are my favorite indicators to use because, in my personal opinion, I know everybody has different opinions.
Mm-hmm.
The indicators that we see on the charts are always lagging,
Mm.
but the economic indicators will show you. Because think about it, right? When we're trading the value of whatever it is you're trading. So
Mm-hmm.
the question you got to ask yourself is, what causes the value of whatever I'm trading to go up or down?
Right.
And it comes down to supply and demand and economics. So if you understand economics and how to read economics to predict the future, then you don't have to wait to see a trend in the markets to jump in. You'll already be positioned very early on and then catch the trend. And then you'll be able to get out of the trade when you see the data starting to change before the trend shifts.
That makes sense.
Oh, that was good.
That was. I ain't gonna lie, that was a good game.
So trading economics is one website that I mainly use because it gives me all the it gives me it gives me all of the data that I need for any economy I'm trading. So if I know one economy is raising their interest rates and another economy is lowering their interest rates, I'm going to buy the currency of the economy that's raising and sell the currency of the economy that's lowering. Does that make sense?
Absolutely. 1,000,000,000%.
So that's one way. Now the question becomes, okay, well, how do we predict whether the Federal Reserve is going to raise interest rates or decrease interest rates, right? Because you don't want to just wait for the interest rate data to come out to get into a trade, because that is also lagging. But if you're able to start looking at when they're going to raise rates or keep rates the same or lower rates, well, now you have an edge against even the central banks. So you got to look at the data that the central banks are looking at to decide whether they're going to raise interest rates or lower interest rates. So let me ask you guys this question, right? I mean, I don't know if you wanted to get into like an educational section here, or if you just wanted
Man,
to.
I'm intrigued, man. Keep going. Go ahead.
Please
All right.
do. Keep going.
Okay. So let me ask you guys, what would be the reason for the central bank to handle interest rates? Like, what's the main reason for interest rates?
Anybody? It's basically so the government can make more money, right?
Okay. So let's take that perspective, right? The government wants to make more money. Okay. How does the government make money?
By raising the interest rates, and now we paying more for things, and it basically boosts the economy, right?
That is one aspect, but the
Mhm.
central bank has something called a monetary policy. Have you guys ever heard of that before?
No, monetary
No.
policy, not me.
Okay. So the Federal Reserve, which is the central banks of the United States, or with any economy, they have a couple of tools at their disposal. Now, let me tell you, right? The Federal Reserve's main goal is to keep inflation at a very bare target level. Like, they don't want us to go into deflation, which means the price of everything is decreasing, but they don't want us to go into inflation or hyperinflation, which means the value of goods and services are raising too much. But the central bank, the Federal Reserve, they always want to keep a little bit of inflation, which is around 2% target. Okay. So when they start to see the inflation starting to go up, they're going to raise interest rates to curb inflation. And we're going to get to that in a second. But going back to the monetary policy, all right. Now, one of the person on here said that the government wants to make more money. Now, the Federal Reserve is the one who controls the supply of money in an economy. So when the government needs more money, the government issues what? Bonds, right? Bonds are like IOUs. So bonds are one of the largest asset classes in the entire world because the bonds are pretty much backed by the government. The bonds say that if you give the government $10,000, they'll give you your $10,000 back in, let's say, a year, and then they'll give you interest on top of that. Okay. So that's how bonds work. They're like IOUs. So the bonds are considered the most safest type of asset class that you could invest into because it's backed by the government and the government, typically pays their debts. So majority of people will invest into bonds. So when the government wants to make more money, the Federal Reserve will buy bonds from the government, which in turn gives the government more money. And this is what we call quantitative easing in the monetary policy.
Quantitative easing.
Quantitative easing. There's typically two types of main monetary policies out there. There's quantitative easing and there's quantitative tightening. So
Okay.
quantitative easing is when the Federal Reserve or the central bank lends money to the government by buying bonds from the government, and the government takes that money and they give it to the banks, and the banks take that money and what do?
Give it to the people.
They give it to the
Give it
people.
to the people.
Yep. And what do the people do with that money?
Put it back in the economy.
They put it back in the economy. They start businesses, they hire new employees, they go out there and buy clothes, they buy new cars, they buy houses. So when people are putting that money back into the economy, is there a higher supply of money in the economy or is there a lower supply of money in the economy?
What?
When the people get the money, right, and they start businesses, they hire more people, more
Yeah, it
employees.
should go up, right?
It would.
The,
Yeah.
so
I
the
was gonna
supply
say
of money goes up in the economy. So when there's more supply of money in an economy, would the value of that currency go up or go down?
up.
Right. Oh, because the economy's doing good, inflation should wait. What?
Well, if
Wait.
there's
Say
more money, it should go down because
It should
everybody.
right
go down. There you
Oh,
go.
because they
hey.
spending money,
Good
so it
job,
should.
Millie.
Yeah.
There you go. So when there's more supply of money in that economy, the value typically tends to go down. That's
Mhm.
why when the Federal Reserve has a quantitative easing policy and when they lower interest rates, that's why the value of that currency typically goes down because when they lower interest rates, more people are at the banks trying to borrow more money. But if interest rates are high, people don't want to borrow more money because they don't want to pay more interest back. So they typically tend to save more money. So when they save more money, let me ask you guys this. If you have a business and interest rates are very high, you want to save money, are you going to hire new employees?
Absolutely
No.
not.
No.
You're not going to hire more employees. So this right here, when we look at, where is it? Unemployment rate, that shows you how the economy is doing based off of are we hiring more people or firing more people? So when the unemployment rate, like back in July, the unemployment rate was at 6.2%. Right now, we're back at 4%. Okay. So when the unemployment rate is lower and inflation is not high and it's low at their target levels, do you think the central bank is going to raise interest rates or lower interest rates? They're going to lower interest
A
rates.
little lower. Yeah.
Exactly. That's how you, Peter. So when the central bank is lowering interest rates, is the value of the dollar going to go up or is it going to go down?
It should go up because it's doing good, right?
No, no, no. But think about what I said. If
What
they're
you say?
lowering interest rates and people are borrowing more money
Oh
and
yeah,
they're
yeah.
hiring,
Taken out of the economy. It's taken from
right?
it.
So the supply of money is going to be more in the economy because the lower interest rates causes people to go borrow more money, hire
Hmm.
more people, and the people
Hmm.
that they hire are going to go out there and spend more money. So there's more circulation of supply of money in that economy.
I get that.
Make sense, guys?
Yeah. Now, how do all this how would you execute on taking advantage of this analysis or this indicator, I would say?
Okay, so now that we've talked about trading economics, showing you guys all of the different data, this is where Forex Factory comes into play,
Hmm.
right? So Forex Factory shows you when the data and what data is coming out for what economy, and this allows you to start positioning yourself for trades before the news comes out. Most people they come on Forex Factory and they just like to trade the orange and red folders because
Facts.
they know during those times there's going to be more volatility in the
Yep.
markets, right?
Absolutely. Hmm.
Okay. But I like to look at, and I agree, there is going to be more volatility in the markets, but I like to look at these data to allow me to see, okay, well, where is that economy headed? Is the central bank, based on the data that comes out, are they going to be looking to raise interest rates, keep it the same, or lower interest rates? Now, remember, if they're raising interest rates, I already know that currency is going to be bullish.
Hmm.
If they're lowering interest rates, I already know that currency is going to be bearish.
Hmm.
So once I start looking at these datas, I'm able to piece together a economic framework
Hmm.
for which direction I want to take the currency in that I'm trading.
Gotcha. And what's one of your favorite pairs to trade?
So my favorite pair to trade is Euro USD
Okay.
because the dollar and euro are the counter opposites of each other, always.
Okay. Right.
So so right now I know that the dollar is bullish because of what? The war.
It's cracking. Yeah.
Mhm.
So because of the war, the dollar is bullish because the dollar is a global reserve currency. So whenever there is times of uncertainty and crisis, the dollar typically tends to go up. That's why here in March, February, March, you see the dollar being very bullish.
Hmm.
So during this time of uncertainty, we can expect a lot of investors to not be riskier. They're not looking to get into stocks and gold and everything right now because they don't know how the situation is going to play out. There's a lot of uncertainty. So a lot of people are going to be sitting on cash right now. They're not looking to really invest. So when they're sitting on cash, that's taking the supply of the money out of the economy, which
Gotcha.
raises the value of that currency. So that's why we see the dollar
Gotcha.
here being bullish. Now, in the same sense, the euro against the dollar, you can see it's completely bearish.
Mm-hmm.
So just by understanding safe haven assets and paying attention to the global economics, you're already able to start placing trades before you even jump on the charts, because you can say, well, right now we got the situation in Iran going. I'm only looking to buy the dollar and sell euro.
Mm-hmm. Got you.
You feel me?
Yeah, I feel you.
So I know this is right now it's a lot to digest. I'm trying to give you guys a full economics lesson here in in like,
20
10
minutes.
like 20 minutes.
No, I
But
get it.
once you understand this, it will now make sense to you why a currency, a instrument, an asset is gaining value or losing value. Because
Mm-hmm.
typically when we press that buy or sell button against a currency, we're pretty much saying that this currency against that currency or this asset against that asset is either going to gain value or lose value. But now there is a logical reason behind why it's doing that.
Mm-hmm.
Instead of just saying, oh, I saw it broke the trend line, so it's got to sell off.
Right.
Where a lot of times, you could get faked out simply by just doing, technical analysis.
Okay.
But now, because when you have the right framework, you're able to identify and say, okay, well, this is the reason why I'm taking this trade, because you understand economics and you understand what causes the value of assets to either increase or decrease.
Got you. So
Well,
how
You guys
would
have
you
any questions? Huh?
how would you execute? So you trade EU, you looked at what would show me how you would execute what you just said. How would you
Okay.
put it into play?
All right. So here's what I would do right now. The ECB on March 19, we're going to have an interest rate decision coming out. So if we look at March 19, we have the ECB main refinancing rate right here. Okay. So for the European economy, this is their version of interest rate for their central bank reserve. Now, if you look here, right now it shows that they are expected to keep their rates the same, which I agree. Because right now, because of the war, they're probably not getting as much oil as they should be getting in the European economy. So if they're not getting much oil, that means that a lot of their goods and services might go up in price. Like their inflation might start to go up, right? And we know that the central bank's main goal is to keep inflation in check. So if we know that because of the war and inflation might go up, we know they're not going to cut interest rates, that's for sure. But we also know they're probably not going to raise interest rates right now because the inflation hasn't gone up dramatically yet. So how would I execute this is I would still look for buys sells on Euro USD, because I am still looking for buys on the US dollar. So simply by going to the dollar, the daily time frame, the 4 hour and the 15 minutes, because I know I'm looking for sales, I'm not looking to jump into a trade right now. I would wait to see if we get any type of pullback here and
Mhm.
then take a sell in the direction of where I think the market is going to go based off of the what I just told you about economics.
Yeah, and we see the last daily low has been broken as well. So that's also an indication that we got to break a BOS right there, you know?
Yep, we got a break of structure right here. So now we're getting a small pullback. The market just opened. So
Mhm.
I would like to wait and see if we get any type of a pullback. Now we might not. The war might continue to escalate and the dollar might continue to keep going up before we get any type of a pullback. But me personally, I don't want to just jump into a sell here, because if I jump into a sell here, I got to put my stop loss all the way up here.
Right.
And from a risk to reward perspective, that doesn't make
That
too
ain't
much
me.
sense,
Mm-hmm.
Yeah.
It might go
right?
back up there.
I'm sorry, what was that?
No, I said it might go back up there. I don't know if y'all paid attention, but early this morning, the United States dropped more bombs in Iran, killing 15 people, and they think they injured the new president, but Iran is denying that. So Take
Yeah,
what you want.
so we're not seeing any signs of a de-escalation right now, which lets
Right.
me know the dollar is going to continue to keep going up. So I'm not looking for any buys on Euro USD. That doesn't make sense to me. I'm only looking for sells on Euro USD.
Hmm.
So if I'm trading Euro USD, I would wait and see if we get a little pullback and then jump in on sells again and take it down for a nice ride.
Got you.
Nice.
So, and we can all already see like the market has been selling off. So if you were positioned earlier before, you would have been able to catch all this move, maybe take your profit and then just wait for another reentry or just keep letting it ride.
Hmm.
But economically, we're going to continue to see Euro USD falling. Now, here is the other scenario. Let's say the war does de escalate and they do come to some type of a ceasefire or a truce or whatever, or the regime collapses or we win, whatever the case may be. If an escalation does happen, a de escalation, then I would start to look for dollar sells.
Okay. Look for USD to go down.
I would start looking for USD to go down when that happens. And then I
Hmm.
would start looking for Euro USD to start going back up because now we go from being in a risk off environment to what we call a risk on environment. There's only two environments in the market, it's either risk off or risk on. So the
Hmm.
riskier assets like stocks, other countries, currencies, anything that's not a safe haven asset, in a risk off environment, the safe haven assets are going to go up, which is where we are right now. It's called a risk off environment, which means investors are not looking to be risky right now because there's so much uncertainty.
Yeah.
But in a risk on environment, investors will then start to jump back into stocks, back into like euro and different currencies against the dollar because now we're in a risk on environment.
Okay.
So me personally, right now, this week, I would wait to see how Euro USD plays out for the most part, and
Hmm.
then once I have the ECB interest rate decision comes out, then I would start to make a formulated trading decision.
Got you.
But right now, I don't want to trade. I could trade the dollar and take it for a buy, but we already had this move. Like I said, the risk to reward doesn't make sense.
It don't make sense. Yeah, for
It
sure.
doesn't make sense right now for me to jump into a buy on this trade. Um, Euro USD sells right now. It doesn't make sense. I should have been got in like last week and last 2 3 weeks before. Then it
Yeah.
would have made sense. Um, Gold right now doesn't make sense because everyone's sitting on cash.
Hmm.
Hmm.
So so right now at this point, it doesn't make sense for me to trade. I would rather sit on my hands and wait. Sometimes trading is literally about waiting for the right moment.
Absolutely.
Hmm.
Absolutely.
Yeah.
So that's pretty much how I would play it. And I mean, it sucks because we always want to be in a trade and making money, but the way you stay
No, it's part of the
profitable,
game. It's part of the
yeah.
game. Yeah.
But the good thing is when you do get those good moments, oh man, you're able to capitalize on trends like this. Like you see gold, you feel me?
That's
You're
crazy.
able to capitalize on the markets going up all the way like this. So
Hmm.
I'm a trend trader based off of macroeconomics, and I'm more of a long term trader simply because I know that if I start doing intraday trading or scalping, there's too much noise in the market, and I'm gonna end up making impulsive decisions. I'm
Yes.
gonna go off of my game plan, and then I'm eventually gonna blow my account. And
Exactly.
I'm 31 years old now. At this point, I
I'm
do
too
not
old
want
for
to.
this.
Yeah, I'm too old for this. So,
All right. That was fire. You guys got any questions for Stan? Because I learned a whole bunch. I'm gonna have to go back and watch this recording.
Right. Same here. That was really good.
yeah, so I mean, the most important thing is just learning what the central banks do and what they're responsible for, which I said is making sure that people have jobs in the economy, that people are happy in an economy, right? So they control the unemployment rate by lowering or raising interest rates. And then they also have a handle on inflation. When inflation starts going too much, they start raising interest rates to lower inflation back down. So the goal of the Federal Reserve is to make sure that people in the economy are good and happy so that the economy can continue to keep producing.
Are there any like YouTube clips that could break this down even more, or that like that you recommend? Because this is really interesting.
I wish I knew a place to recommend this to you guys, but unfortunately, I don't. I learned all this a couple of years ago. I took a course from some guy who was teaching macroeconomics, and I kind of forgot his name now, but he literally broke down like interest rates, inflation, unemployment, what is CPI, PPI, what is the manufacturing index, how it all correlates. So there is a lot of information, but I wish I knew a place to recommend you guys to go to learn this, but unfortunately I don't.
I just
Is his
threw.
name is his name Shimon Fletcher?
No.
Oh, okay. That's where I learned how to trade news. That's what I was asking.
Yeah, everybody teaches how to trade news just by saying, go here, filter out for the red and orange folders and then just
Well, no, he goes into like the macroeconomics of it all, and like
that's
he
it. Yeah.
also breaks down like when you click on the folder what it actually means because the
Yep.
jargon is confusing to the regular retail trader, and so he
Yep.
basically broke it down into layman terms. Like it's basically if this then that,
Yep.
basically. Like
Yeah, and I agree. I mean, what confuses people the most with macroeconomics and fundamental analysis is literally the jargon, the terminology, because it's like, yo, what the heck is the inflation? What is this? What is that? And it's like, I don't. So I agree with you. It is a lot of it is jargon, but once you understand what that jargon means, and then you start thinking about how it applies to the economy, that's when you really get a whole holistic overall understanding of how everything kind of works.
Fire.
mhm.
Okay, that was lit.
Yeah, you guys have any other questions?
No, not me. I appreciate you hopping on.
You're welcome, man.
Now I threw his Instagram in the chat, so if you guys want to give him a follow, go ahead and do so. If you have any questions, you can probably DM him and ask him that. I mean, that's the closest I can say as far as learning the information. Stan is an educator. He do have his own communities as well. So, if you guys want to lock in, we ain't gatekeeping nothing. We just giving it out. You know what I mean? So no Diddy, but you feel me? We just
Yeah, I
putting it
cannot
putting it
with
out there.
you.
If you guys are taking notes, I'll tell you guys like Swiss franc is a major safe haven currency
hmm
because they hold a lot of gold. USD
You said
obviously
they
is a
hold a
safe.
lot of gold.
Yeah. Swiss franc has had the world's most amount of gold reserves. So
Okay.
that's why when you look at like a pair like Euro CHF, look at this. It's just straight disaster. It's lost so much value.
Jesus Christ.
hmm
So if I'm
That-
trading Euro CHF, I'm never looking for buys.
Now, obviously, that's crazy.
Also look at USD JPY. Look at this, right?
Mhm. Yeah, I
And
think I'm waiting on sales, but I'm not too sure. I really don't know what's about to happen, but I like where it's at, but it could break that
the
resistance.
the only reason we see these sells on USD JPY is because of currency intervention from their
mm
central bank. Because JPY keeps a negative interest rate. JPY had what we call um, deflation, meaning the value of their goods and services just kept on going down and down and down.
Uh-huh.
Uh-huh.
So what that happens is, like, let's say for example, you want to go buy a loaf of bread today, and today a loaf of bread, like a bag of bread, costs $2, but tomorrow it's gonna cost $1.75. You're not gonna pick it up today. You're gonna wait until tomorrow. So when everyone in the economy does that, the demand for values and goods go down, the supply goes up, and the price of those goods and services just keep going down.
That's
Does that make
crazy.
sense?
No, yes.
hmm
So in order to combat that, the central bank of Japan put a negative interest rate, and what that means is if anybody saved their money in the bank, they got to pay fees for saving that money in the bank.
Uh-huh.
So
Okay.
that's why you see the currency value of Japanese yen losing so much. And then when you have an economy like the US dollar, the United States economy that was raising interest rates during post COVID, and the interest rates are right now around 3 point something. it pays more to hold the US dollar than it does to hold Japanese yen.
Okay, gotcha.
So that's what we call a carry trade. A carry trade, like Peter, you see those swaps that we pay for holding trades
Yes,
overnight, right?
absolutely.
So those swaps can either be negative or positive,
That's what
but
I
the
found
current
out.
yeah, but the
You can
currency
get
that has a
paid from
higher
swaps. I didn't know
you,
that.
you can get paid from swaps,
Yeah.
and in institutions do what's called carry trades. So
Hmm.
they'll sell the currency that have negative interest rates or low interest rates and buy the currency with a higher interest rate and just hold it
Hmm.
because now they're getting paid to hold that currency.
Yeah, they basically playing forex in real life.
Yeah, they're making interest on holding that currency.
Yeah.
And
Hmm.
that drives the value of that currency up even more. So that's how interest rates play a very big factor in currency direction. Like understanding this allows me to figure out my directional bias when I'm looking for, and do I want to take a buy or a sell? And then I use the charts for price action to determine my zones to catch my entries and get my risk to reward ratios by placing stop losses in the proper place.
Absolutely.
So that's how I create my framework for trading. Economics and understanding all this gives me my directional bias. The chart and price action gives me my entry and my risk to reward ratios and stop loss. And then even for take profit, I go back to my economics because when the data changes, that's when I get out of trades.
Okay, so you use it the same way to get in, or figure out what you're going to get in is the same way you use to get out, as far as exiting the market.
Exactly. And also based on economics and geopolitics, is how I decide what do I want to trade this week. Because you could trade
Gotcha.
anything. There's so many instruments and assets to trade. The question is like, okay, what do I trade this week?
Mm. And that's where you go back to the analysis that you showed us from the beginning, and that will basically tell you what to kind of look at for the week to
So
give you an idea on how you could capitalize on the price move.
Correct.
Yeah. Okay.
Mhm.
what's your instrument for telling you what's going to be moving? What are you going to trade this week?
Forex Factory is so. Let's say in a scenario where there is no war, because that's usually like 80% of the time. Right now, it's like the
Right.
20% where we are in a war. But usually, I look at Forex Factory, and based off of the news that I see coming out, it's what I'll look to start trading. Because when you're trading, the markets are forward thinking, right? So there's something called priced in behavior. If we know like the RBA rate statement for Australia, if we know that Australia is looking to raise their interest rate, you see how right here it's at 3.85 and the forecast is 4.10. So I would start looking to buy the Australian dollars even before the news comes out, because I know that when the news comes out, and if this does come out like this, it's gonna push the market more in my direction. I'm
Mhm.
already positioned.
Right.
So I look at Forex Factory to see, okay, what news do we have coming out? And then I go do my research on that economy. And then I look at what currency or economy can I trade against the AUD.
Right. Mhm.
So if I know that Australia is going to raise interest rates and Europe is going to keep their interest rate the same, this week I'll probably look to sell Euro AUD.
Mhm. Gotcha.
Because I know that when they raise interest rates, the value of Australian dollar is going to go up, and because they're keeping the interest rate the same for Europe, the value of European dollar, or is it called the European dollar? The euro, sorry,
Euro.
the value of euros is going to go down. So this right here is a perfect instrument for me to trade this week.
Gotcha.
So you see how that quickly, like I didn't even do no analysis before this, but just by looking at this, it's like okay, well shit, that looks like a great.
Then I go look at the chart. Let me see where I can get in, or see how we can possibly maximize on that.
Right. Then I'll go look at Euro AUD and boom. I mean, it's already sold off a lot on the monthly time frame. So I'll wait for a pullback. I'll see how it goes. Like I
Right.
said, right. I don't want to get in this trade. It looks ugly because there's no like good risk reward here.
No, but that drop looks amazing.
Yeah, that
Yeah.
was from I got in it last week. It spiked up to like 114 or some shit like that. And then I just was like, oh, it's about to fucking sell. And I just started selling it.
You see what I'm sure you guys have heard of the term smart money.
Yeah.
Hmm.
right?
Mm-hmm.
Smart money are the whales in the market. They're the billion-dollar hedge funds. They're the large institutions that are trading with billions and multi-millions of dollars. So when they make trading decisions, they influence where the markets go. And
Right.
smart money is paying attention to these datas. So even
Mm-hmm.
before the interest rate decisions come out or whatever news comes out, smart money has already factored that in and they're already positioned.
Got you.
So that's why even on Euro AUD we see this big drop because smart money has already determined that Australian dollar might go up in interest rates. Euro it's already been cutting or might keep the same, and we already see this move happening here. And that's what I call priced in behavior because the markets are already pricing in certain situations and scenarios before it even comes out to retail traders, before retail traders are even aware of it.
Got you.
So I
Mm-hmm.
really like to trade price and behaviors, but right now, like looking at the charts, I don't want to take a sell on this
Right.
because, you know,
Yeah.
yeah.
Mm-hmm. I'm waiting for it to push up a little bit more before I determine if it's going to sell again because it didn't look like it when I looked at it yesterday. I was looking at oil too. Oil spiked up, obviously, because of that news. It
Yep.
pulled back. And if I was paying attention, I would have gotten it for another buy, but I didn't. Starting to buy again.
Mm-hmm.
Got you. You guys got any more questions? Thank you, Stan. For
You're
real.
welcome, bro.
Yeah, I like the way you trade, Stan.
Yeah,
Yeah,
that's
that
right up
was
your alley,
really
Cookie.
good.
It is like it's a lot alike.
Yeah, for sure.
This just makes more sense to me because for a very long time, like years of me trading, it was literally okay. It was purely technical analysis. Put it that way. Like
Hmm.
I
Mm,
was just looking at the charts. I had no idea about economics. I had no idea about what's causing the markets to move. None of that. And I would always wonder like how can I predict this? Like there's got to be something more to this. And then once I learned
right.
economics, then I started understanding. I'm like, oh shit, this actually makes a lot of sense.
Hmm.
Well,
That's what's up.
Cookie, that person you spoke of the videos, can you drop that in the chat?
Shimon Fletcher. Let me see if I still, because I don't watch them anymore because I've done watched all of them, but he's on YouTube. Um,
Shimon,
Shimon Fletcher. He goes by Sham.
Sham
Um,
Fletcher.
let me see if I
Watch your mouth. But I'm talking about shit.
can.
Well, thank you, Stan. Y'all got any more questions? I don't want to hold my man. He definitely got stuff to get back to, but I definitely appreciate you pouring into the community, man, and just giving
Yeah,
us your overlook on how you approach the market. That was very interesting.
informative.
Yeah, for sure.
Hmm.
Yeah, I hope I didn't give you guys a headache.
Not at
Not at
all.
all.
Nah, not at all. We good, man. But thank you so much. If you guys don't have any more questions, man, we're gonna go ahead and end the call. I will put the recording on YouTube. I did drop his IG in the chat. And if you guys wanted to tap in, feel free to
I
do
already
so.
followed.
That's what's up. That's what's up. Well, thank
Mhm.
you, Stan. Like I said, any more questions before we close out?
Nope. Thanks, Dan.
You're
Thank you.
welcome.
Thank you,
you guys.
Stan, man. I
Appreciate it.
appreciate you. Thank you.
All right, guys, take
All
care.
right. Thank you. All right, guys. I'll see
Yeah.
you in the chat. We will be live tomorrow morning, 9 a.m. EST. So just tap in for the win, family. Y'all have a blessed, productive, and profitable rest of the day. We'll see you at the top from the top.
Let's get it.